To be consistently profitable in trading, you need to get into the flow of the market momentum so that you can time when to buy the dips and when to sell the tops in price by being in tune with the natural rhythm or momentum of the market. To do that, we need the best possible momentum oscillator money can buy. And for that, I use the MDX ALGO Wavemaster indicator, which is this tool here, which has two different modes, the harmony mode and the reactive mode, to show that momentum with all these added features like reversal dots, confluence bars, volume waveforms, regular hidden divergences, and a host of other really powerful features. The question is, are you willing to put the work in to become worthy of wielding this powerful tool?
I knew it.
So now you are ready, follow my ultimate guide to become a wave master. To integrate harmony mode into your trading, it helps to brush up on your RSI knowledge. So feel free to check out my RSI tutorial popping up here. Otherwise, let's dive into the tool. So here is harmony mode, and I've actually got RSI up here next to it. And I'm just going to show you how powerful the Wavemaster is by teaching you all of the individual components and building this up gradually. Starting with the primary Wavemaster oscillator lines, which are shown by the thicker trend line here and the thinner strength line. Now, to explain what these are doing, first of all, the harmony indicator itself is showing you the speed and magnitude of the asset's price plotted on a scale from -100 to +100. And that thicker trend line is showing you the overall trend in price based on the current market structure. And the thicker line is actually comprised of multiple indicators, including the MACD, shaft trend, SMAs, EMAs, all combined together. And then the thinner strength line is a faster acting line, which is made up of the RSI, stochrsi, TTM squeeze, and these others here. And then the areas at the top and the bottom of the channel, well, those dotted lines show you the overbought and oversold zones. And on this tool, that's at a level of anything above or below 60. And then it's further accentuated by these red and green color bands. So far, this is fairly similar to the basic RSI line you see here. But then where the tool starts to become more powerful is as you start adding the other components. And the first one is the reversal dots. So if we turn these on, so now you see we have these light blue reversal dots at the top of the channel, and we have the other yellow reversal dots on our trend line. Now, to explain what these are doing, the blue dots at the top of the channel highlight when there is a much bigger spike in the RSI divergence, which is when those RSI values go above 80 and then come back below. And generally, this is an early warning for us. We're entering extreme oversold or overbought areas, and we start to think about a possible reversal. then the yellow reversal dots on the trend line, they are based purely on a reversal in the trend line itself. It's not when the two lines cross, it's only when the trend line switches direction. And that's a very simple but effective visualization that the trend is shifting from negative to positive. Although you will find it often does print after they cross as well, but that's coincidental. Now, the next tool is the Confluence Bars, which I'll turn on. The Confluence Bars are shown by these white vertical columns appearing at the peaks and the lows of the oscillator. And this gives us a visualization of when both the harmony mode and the reactive mode of Wavemaster are moving together. And this has several benefits because it gives us additional confluence that we may be seeing a top or bottom signal from the oscillator. Also, when those bars are longer in length, it means there's an even stronger confluence signal. Also, when the bars themselves start reversing direction, that shows a gain or loss of level in the price and is an early confirmation the reversal is starting. And you'll often see that the bars will reverse before the reversal dots appear. Generally, this is best used for the absolute extremes of overbought and oversold rather than continuations. And generally, it helps us to get into trades earlier. So looking at the chart, you can see here in this recent dip with Bitcoin, if I move the RSI out the way, here the price hit the lows around 50,000. But before the recovery and move back up started, look at the confluence bars down here. They dipped right down into the green, and then the confluence bars start moving up. And that's actually before the yellow reversal dot prints. And then another more recent example, here Bitcoin has topped out at 62,000. And you can see this yellow reversal dot has printed, and also the strength and trend lines have crossed, indicating price is coming back down. But those white confluence bars did actually peak and start reversing a bit earlier, because it's also bringing in the reactive logic as well, giving us that nice early warning. And on top of that, we also got the reversal blue dots up in the top channel, another early warning. So all these added features are helping us to get into those trades a bit earlier and with a bit more confidence. The next feature is the volume divergence. So if we turn this on, you'll see this waveform appear behind the oscillator line in dark blue and green. And to explain what this is doing, this is a volume weighted moving average, basically just showing what's happening with volume. And it tells you the calculation logic here. But broadly, what this is trying to do is show when a move in price is likely to be more powerful, because that move is backed up by large amounts of trading volume for the current impulse, either moving up or moving down, rather than a fake out, which is likely to reverse. So generally, you're going to look for following the trend when you see that volume coming in, and if it's going up, when the volume divergence line waveform is going from blue to green and vice versa. This does actually work pretty well on all time frames, but here on the 1 hour chart, you can see again with that example before, Bitcoin bottomed out around 50,000, and you can see the volume divergence wave there has hit the bottom, and then you see how the volume starts trending up, and then it flips from blue to green during this whole move up here as more and more and more volume is coming in. So that's just another added confluence to give you extra confidence that this oscillator is showing you that momentum in the right direction. The next feature is the divergences, which we can turn on in the menu down here, and the default is fast for both regular and hidden divergences. I personally like to color the hidden ones in orange just to differentiate, and for the regular divergences I like to go into the style tab and turn on the connecting lines to see them more clearly. And now that has loaded, you can see the hidden divergences for continuation in orange, and for the reversals, the regular divergences green at the lows and red at the highs. Now, in terms of the indicator, the fast setting means that it is using that strength line on the indicator, which is the default and generally is better. Although if you want, you can select the slow setting and it will use the trend line instead. And in terms of uses, this works like any divergence. It's showing you, for example, where there is a bearish divergence, for example, between where price is increasing while momentum is decreasing, and vice versa for bullish divergence. So going back onto the chart, here's a classic example of bearish divergence on Bitcoin. We saw in July, price rallied from 54,000 up to around 69,000 on the 29th of July. And look here, if I zoom in a bit more, just zoom right in, see here, look, the oscillator is showing momentum increasing, and then it hits this peak at 68,000. Then we get a little pullback. Then price goes up to a second higher peak of 69.5 thousand. But you see here on the oscillator lines, while price is making a higher high, the oscillators are making a lower high, which is a divergence. So then it prints that regular divergence, and not long after that there was a huge crash in price. It went down from 69,000 all the way down to 50,000, and if we measure that, that's a drop of 26%. So just shows you how powerful those divergences can be, and it's another nice component for the tool. Now we have everything switched on for harmony mode. There are a couple of other settings. So here you have a sensitivity option, and the default value is 5, which generally I find works best, although you can lower this down towards 1, either if you're looking at a much more volatile asset, or if you want to see longer term price trends over longer time frames, like several days or weeks, and filter out a bit of that noise just to get more the overall trend in price, particularly for swing trades. In terms of the shading in between these oscillator lines, this green shading or red shading, what this means is the wider is that color band between the strength and trend lines, it means basically that the strength line is more likely to catch up with the trend, meaning it's more likely for continuation in the current direction of price. And then when the lines merge back together and the shaded area disappears, that's likely the end of the impulse and a breakdown is incoming. So like here, for example, you can see this impulse up here. There's a large wide band between the two oscillator lines, and then as they converge together and you see the reversal dot, that's where we saw this small little breakdown. Or another one here, we hit the lows, lines cross, the bands go, wide apart with the strength line going up first, and that's the beginning of that impulse. And while these bands stay wide apart together, you're expecting price to continue. And now they're beginning to come and squeeze back together, which might be the end of this most recent impulse for Bitcoin. Other pro tips for using harmony mode. In terms of time frames, generally you can use this on any time frame you like, although as with most indicators, it tends to have the strongest predictive power on the higher time frames. 1 hour, 4 hour, daily. You'll get those much bigger moves. Another tip is about, rather than focusing too much on any of the individual components, overall, the idea with this is it's trying to give you a general direction on momentum to give you that long or short bias until that oscillator gets all the way to the extremes at the overbought or oversold top and bottom of those channels. And also, just generally, oscillators are more of a backup tool where other indicators and market structure you would look at more closely for actually getting your trade entries. So with this, confluence is always king. You've got to look at multiple aspects. And then just lastly, to show you that sensitivity setting, because you can sometimes get distracted with all this noise, like in this sort of ranging price action area. If we dial that down to 1, just let it update. Now it becomes much more clear what's happening. We had these lows in early July. You got those reversal signals in the green band. Nice wide difference between the two oscillator lines. You've got the volume divergence going from blue to green, and we get this nice trend up in price from around the 6th of July until the 29th of July, which is nearly 3 weeks, and price went up from around 55,000 to 70,000. And then when we hit the highs, it's a similar story. When you finally got that divergences signal and price starts to break down, on this lower sensitivity mode, it's removing all that noise, and you can clearly see the indicator heading down. The direction is very clear. We're on the 4 hour, and if you got into a short, you've got a lot more confidence just to stay in that trade. You're seeing the volume also trailing down from green to blue. And ultimately, that's what oscillators are all about. So you can just have that bias and be following the momentum in the right direction. To wrap up the harmony mode, I hope that now you can start to see how powerful this tool is with all these different features that we've gone through. And personally, I find that compared to just regular RSI, this tool is so much more versatile and can help me to get into so many more really good trade setups. And then on top of that, I can have more confidence that when I do enter these trades, there's so much more confluence from all these combined features, the fact that it harmonizes multiple different indicators all into one tool. And ultimately, all we're trying to do here is make money and be successful in trading. So I believe to do that, you need the best tool for the job. For my first guest on the show, I have Crypto Viking, who gives some great examples of how to use the Wavemaster while in harmony mode.
Doing Tesla here as an example that it works not just on Bitcoin and altcoins, but in the broader market, from everything to Forex, commodities. It's universal, like many of our indicators. So looking at Tesla here, and before I go further, I'm just going to put it on extended trading hours. So we're going to go back and just look through the last, effectively 2 weeks, just on a 1 hour time frame. And the way we use it is actually pretty awesome. The trend line, that's always a good example of where the direction of travel is expected to go. The thinner line, the strength line, will move a lot quicker. But just in the last 2 weeks, it's been very interesting trading. The blue dots on the top here, these are actually showing reversal potential. So when these start flashing on anything you're looking at, just be aware you're in very overbought conditions if they're on the top line, or on the bottom line, they become very oversold conditions. So something to keep an eye on. Also on the yellow dots here that are on the trend line, these are actually showing trend changes. So from the highs, this is a great example just to show where we've come from and what we've gone through here in the last 2 weeks for Tesla. So we came up to a high structure, right, about 235, 236, and we started getting reversal warnings when we started seeing this stuff. So that means price is breaking above pretty hard metrics and then reversing a little bit. So it's starting to see a little bit like we're getting some reversal stuff coming in potentially at these high levels. And then finally, if I change this to the cross, we can see at the same time that we got the trend change was this candle, and then the next candle, that is when that's locked in. So this, now you're looking for the breakdown of the structure for a short to go lower. And what did we get in the next 3 hours, right? We had a lower high, a failure, and then a breakdown that broke low structure. And this is great because we saw that strength was already breaking down. So even though we were making new local highs, strength is diverging and breaking down. The gap between the strength and the trend line is quite high. And then by the time this thing actually shows the trend change, right, you're looking to build a short because you have trend change and reversal. Strength is breaking down, and you're able to catch the entire move down into the lows until you make the first higher low. Right, it's the first higher low there, which also gives you a trend change. So you can ride that back up until you get a bearish divergence on strength. So bearish and bullish divergences are very high hit rates. Definitely the higher the time frame, the more effectively it hits. So bearish divergence, looking to take profit on those longs if you caught the trend back up. And then again, we get trend change when we have a local loss of level. Strength is breaking down as price is going sideways. So what do? You build your short to catch the down move. Price breaks across the zero line, and we have continuation down to the first major profit target, continues to be choppy and down, staying in oversold conditions. We have a one trend change here, but again, if you try to catch that or hedge that off, you would have caught some of it, but potentially being stopped out. The continuation move was all the way down until we got the higher lows down at like 196, where we started going to chop and sideways. But looking at this very simply from overbought conditions to extremely oversold conditions, this is a great way to show where the price is expected to go based off of trend. And along with that, a great tool that we also have called auto charting tools. When you're looking at high time frame levels, all I have here is the default settings, but I have supply and demand checked on, which shows these nice little supply zones and high time frame levels. So price is breaking up, not really achieving or gaining above the December open at 233, breaks back down, has another pop back up. It's all starting to, show weakness. It's breaking down. It's trend change. It's creating a supply zone, which basically means more sellers than buyers. People are trying to offload. And we have a further strong breakdown deep to test high time frame levels. And all this is really good for is to give you potential areas where for continuation short. So obviously trend change, strength breaking down, trend breaking down, and we had a bearish divergence at the same level at a high time frame open and a supply zone. Like just on its face right there's 5 things telling you that the price is very likely to have a breakdown. So again, works on everything, works on every time frame ticker. I recommend people check out 1 hour, 4 hour daily, just because they're very powerful with so much confluence of all the different indicators that go into the logic of the Wavemaster.
Some fantastic examples there from Crypto Viking, bringing all those harmony features together. Now let's move on to reactive mode and see how you can gain even more confluence for your trade setups. The Wavemaster reactive mode can give us a completely different view of momentum relative to volatility, as we can see in the tool here. Now, I like to change the color scheme for the oscillator line from auto to gradient, like so. And now you can see the oscillator in between these volatility bands. Now, to explain what this is doing, the oscillator line itself is a more advanced version of the simple RSI line, representing moving averages around the RSI variation. And that color gradient provides an extra level of detail to give a visual kind of idea of how overbought or oversold is the asset. Now, moving on to those bands, they are the Bollinger bands, and it consists of 3 lines. You have the central Bollinger line, and then the 2 outer bands, which are 1.618 standard deviations from the central Bollinger line. Now, to explain this further, let's jump onto the whiteboard, and I'll give a quick example to understand what this means.
That's a nice one.
If you have advanced mathematics skills, then feel free to skip to the next section using the video chapters down below. Now, to understand Bollinger bands, we simply take our price chart with the green and red candles and plot on the simple moving average line denoted here in blue. Now, for the Wavemaster reactive, this uses an SMA with 34 periods to smooth out those prices. And that could be 34 days or 34 hours, depending on the time frame on your chart. However, what we're really interested in is what is the price dispersion or variability either side of this simple moving average line, because the dispersion amount gives us an indication of the amount of volatility or price variability, right? Now, before we plot on the Bollinger bands, to understand this in more detail, it helps to think about the distribution of prices at one point on this chart. So for example, if we take the first candle here, and let's assume this is the daily chart. So that candle would represent buy and sell orders all through a 24-hour period, which are all those buys and sells contained inside that candle through the whole day. So if we took all of that price information and we plotted that on a price probability distribution, also known as a normal curve in statistics, then there would be a spread of different prices that occurred during that day. Now, with statistical methods, we can easily calculate the different prices and what is the average or mean value. And then we can apply a standard deviation in terms of how much is price varying either side of that price average for that day. Now, the Wavemaster reactive mode uses this and applies a standard deviation of 1.618 standard deviations from the mean. And the reason for that value is that according to probability theory, 89.43%, approximately 90%, of all the possible price values from this distribution of orders in that day will all fall in this area of the normal curve. So in other words, 90% of the possible prices that could happen while prices varying through the day are going to happen in that distribution, which is in between that deviation of 1.618, or the golden ratio. And that tells us where to plot the Bollinger Bands. So for example, with that candle, we would go up 1.618 standard deviations from that price there, and also down the same amount, and we plot on the first point on the Bollinger Band like so. Now, if you did this on the software, it will calculate this for you and work out what are all the Bollinger Band points above and below the simple moving average line to tell you where the Bollinger Bands would go. And then you simply just connect up all the lines like so and like so. And now you're starting to see the Bollinger Bands either side of that simple moving average. Now, all that the Wavemaster Reactive tool does is, rather than have it directly on the chart, we take that information and plot it separately in an oscillator. So we have our Bollinger Band central line, then we have the Bollinger Bands either side with our standard deviation 1.618 positive and 1.618 negative. And then lastly, we then, well, the software does it for you, then plots on the RSI line as it relates in between those bands. So that way you get a view of both the momentum, but the key point is here, it's showing the momentum of price relative to the volatility that is occurring at different points in the price action. The easiest way to understand this now is to jump back into the charts and apply this to see how this works in real time. So now you understand how the Bollinger Bands work, we can apply this onto the Wavemaster Reactive indicator to find some nice reversal trades. And the indicator helps us further because it also has these green or red dots and these yellow triangles. And to explain what those are doing, the red or green dots highlight when the oscillator line first moves outside the Bollinger Bands, and then the yellow reversal triangle dots show when the oscillator line is moving back inside the Bollinger Bands. And that's the best point to get into the trade. So for example, here in Bitcoin, we had this move down in price from 68,000 down to 64,000 towards the end of July. And down here, you can see the oscillator line has moved outside the Bollinger Band slightly, and we get those warning green dots. And then the yellow triangle is printing as it goes back inside. And we did actually get a small move up, but then there's a second move down and it happens again. The green dots print, warning, the oscillator's going outside the band, and then the triangle prints, the oscillator's coming back in, and there it was fairly oversold, and we could have got into a long trade for a nice move up from 64,000 to 69,000, which was a 9% gain. Although generally the best opportunities are when it's even more at the extremes of oversold or overbought. So for example, down here, more recently in August, here we've had a big crash down in Bitcoin, down to 49, 50,000 area. The oscillator line moves outside the band. We get those green dots warning. And then as the oscillator moves back in, we get the triangle printing to confirm the reversal. And then we start getting the move back up in price. And that was a move from 50,000 to around 62, which was a 19% gain. The reactive mode also has the regular and hidden divergences, and these work in exactly the same way as harmony mode. Although, interestingly, I've pulled these up side by side to show where sometimes the reactive mode can give you a better signal. So I'm now on the 1 hour chart. I've got the divergences turned on with both harmony and reactive modes. And you can see we had that move up in Bitcoin from 50,000 up to 60,000 over the last week of August. But here on the 7th of August, there was a bit of a pullback in price. Now, both of the oscillators did have the move down a lot, following that downwards momentum. However, in the harmony mode, which focuses more on the momentum and doesn't really consider the volatility component, there wasn't really a very strong signal for a continuation here. Also in the harmony mode, the confluence bars are fairly kind of muted near the 0 line, and the volume divergence waveform is not really doing much. You did get a reversal dot, but that came kind of after the move back up had already happened. However, in the reactive mode, you can see that as we were getting that move down, it led to higher volatility relative to the recent time period, which had very low volatility and tight on those Bollinger Bands. So when you got that move down, the oscillator line moved outside the Bollinger Bands. We got the green dots warning you that was happening. Then it printed the hidden divergence, hinting we were going to get a continuation. Then you get the yellow triangle printing as the oscillator line moves back inside the band. And only a couple of hours afterwards, we then get a nice continuation move up, which was clearly signaled in the reactive mode, which you probably would have missed or been too late into the trade if you are only looking at harmony. So really nice example there of reactive mode and using the divergences. The last Wavemaster feature for reactive mode and also harmony mode is the alerts, which is often overlooked, and you won't see the alerts anywhere directly in the Wavemaster menu. Instead, you need to come in TradingView into the alerts area here, make sure you have the Wavemaster panel selected, click to add alert, and now you'll see this panel appear, which allows you to set alerts for either certain criteria being met on harmony or reactive. So for example, you could have an alert for when the oscillator is going outside the band or when it's re-entering back into the band, like this one, for example. Set it to only go once, click create, and it will create your alert there. There are also multiple other choices. You can do the same for the harmony reversals and trend changes, the bullish and bearish divergences. And this can be really, really powerful, especially if you're more of a swing trader and maybe you're not at the charts all day. You can just set this and forget, particularly on those higher time frames, and it's going to ping you so you can get back onto your mobile device or onto your laptop and get into those great trades. For my second guest on the show, I have interviewed the founder of MDX ALGO, Max, who shares some absolute golden nuggets when using reactive mode with advanced trading strategies to maximize those gains.
Between around here and around here, it was relatively low volatility in terms of this took a long time to kind of arc down. The bands it's telling you whether you're overbought or oversold within this range. And then suddenly you see how the bands have extremely expanded up. This is when that fast move to the upside happened. And this move happened pretty much in half the time that this happened. So this all went round slowly, and then volatility was slightly lower. You came down to here, re-entry, and then suddenly we had a big expansion. And that's because you're getting an aggressive move because the bands are now expanding. You can see they're going like this and going like that. It's a good example. It's not perfect. There'll probably be something better. This is a real nice one.
Okay.
Super. Look how tight that is at that point.
Yeah.
Right there, these bands are so tight. And then look, boom, big expansion, massive move. So it's like a decrease, and then it's telling you if you're overbought and oversold within this, and that's hard for an RSI because that doesn't mean anything. That's just flat. The RSI.
Yeah, that's good. Yeah, now it's better. Yeah.
Yeah. So the RSI in this specific mode is like that, flat, and it's not touching anything. It's just like, oh, we're going flat. But this is kind of telling you, it's overbought within this tiny little bit. So it's kind of taking into account what the volatility within this tiny range is. And then you get the expansion. And then okay, it doesn't have to be directional, but you can see that this said it's overbought here, which was there. And then guess what? Overbought means potential. You could look for a short, right? There's no information on the RSI here, really.
That was a really good explanation, yeah. And what about, you've given an example in a low volatility environment. Can we try and find one?
It's like this. Great example. You can see how the bands, look how far they are from each other. Massive breadth. So it's like you've come from a low volatility point, squeezed bands there. And then you've suddenly from here, the bands are really expanded. So it means that essentially the volatility is high, and that's what the volatility was in comparison to the last calculations. And then again, flat, they begin to come in. You see they're coming in the whole time, sweeping in. And then in here, you have a nice little thing. It's like between the two bands, here and here, you went oversold here because you're outside the band, and then back in, and then flat. But the RSI is not giving you anything here, but it's saying like you're overbought, but you're in this little range. If you know what I'm saying?
Impressive.
Yeah.
Good job, sir.
Yeah. That's how I would use it. But it's a different way of looking at it, but it is valuable in itself. And if you know how to use it, a lot of the guys in the community before really like this because it's super clear, and it does give you a little bit of added. It's just like wearing a different pair of goggles or glasses to look at things. Like, it's like a microscope. There's like two different types of microscope. Like one's looking at that thing, and then there's a different thing you're looking for. It's kind of like what these are, the differences.
Like X-ray versus infrared.
Yeah. I think that's a good example, yeah.
Great stuff, Max. Well, that wraps up everything on reactive mode, harmony mode, and this masterclass on the Wavemaster tool from MDX ALGO. If you'd like to see more, then click on that notification bell and subscribe button down below, because next week I'll be doing an episode on the Capital Flow Index tool for your altcoins. So definitely check that out. Otherwise, I hope you've enjoyed this episode and got tons of value. I've had so much fun making it, and it's great getting out in the sunshine, and I hope you do too. Good luck with your trading, and I'll see you in the next one. Cheers.